Hey, what's up, guys? It's Dan again from CryptoCamacho.com. And hey, guys, today I want to put you at ease. I want you guys to feel relaxed. I want you guys to look at what I'm about to show you, and I want you to know that what is going on in the market today is completely common. It's happened many times in the last, let's say, 7 to 10 years, where there has been incredible hikes in price and incredible dips in price of Bitcoin and other cryptocurrencies. I want to show this to you very quickly because I just want to put you guys at ease of what's going on in the current market. So I've talked about the crash in recent videos. You know, we've obviously seen a high of $20,000 for Bitcoin. We've seen a low all the way down to about 6,000, actually under 6,000 on Bitcoin in the last 2 months. Now we're seeing signs of the market recovering, and there are still people that are saying that the market still may go back down and dip again. But what I want to tell you is do not fear, because what I'm going to show you right now will calm all of your fears right now. So let's jump right into it. So this graphic I came across on Twitter. It was provided by Charlie Bilello, I think his name is. It came originally from CoinDesk, and Charlie tweeted about it. I happened to notice it on Twitter. And it's showing Bitcoin major corrections from September 2010 to December 2017. And I think it's a fascinating view of what has happened in the last 7 years, let's say, in the percentages around the declines we've seen in the last 7 years, and how it relates to today's market, where we have recently seen multiple downturns, and we may even see another one again. I think it's really good to look at a chart like this, because it'll show you that this kind of thing is very common. This is not unique to 2018. It's not unique to this year, right? Where cryptocurrency is starting to gain mass adoption. It's starting to kind of ramp up and gain more widespread adoption. And so you can expect the highs to be higher and the lows to be lower. And so now, just for kicks, let's go through a few of these, just as an example. So if we look all the way back to September and October of 2010, the correction lasted for 24 days. There was a high of 17 cents and a low of 1 cent, right? So that is a 94% decline from 17 cents down to 1 cent. And the return back on the high was 1,600%, right? So we went down, right, 100%, but then we went up 1,600%. Same thing happened in November of 2010. This time the correction only lasted for 4 days. The high was 50 cents. The low was 14%, with a decline of 72%, and then returning back to a high of 257% on January 31st. And it took 86 days to do that. So I just want to show you this because it really articulates, the percentage declines we've seen and the percentage increase on the return back to the highs. And if you look at even last year, let's just go to 2013, right? Over a period of 88 days, we saw Bitcoin at a high of $266 and a low of $63, and that's a decline of 76%. When we went back to the high of 266, we saw the 323% return, right? And it took 211 days to do that. So it did actually take quite a bit longer to do that. But if you look in recent years, especially in 2017, there's been multiple dips, right? You've seen one at 33%, 39%, 41%. So the dips are getting smaller, and the number of days it's taking to recover from those dips back to the highs are actually getting shorter as well. So if you look at the most recent dip, and this only records out to December 21st, unfortunately. So on the 17th, between the 17th and the 21st, we saw 4 days. It went from 19,783 to 13,000, approximately a 34% decline, and it returned all the way up from that $13,078 at a 51% gain, right? And you can look at the charts here. If you look at the charts from December 17th to the 21st, let's just go over and do that. Let's see, 17th. Whoops, I'm all the way back here, actually. 17th. Okay, so the 17th right here. Okay, so we see on the 17th right here, we're at about 20,000, right? Then we see a decline all the way to the bottom here, which is about, let's say, 40% approximately. I'm measuring this kind of arbitrarily. So he said that the percentage was 34%. I'm going to say the percentage was 44%. And then from that base, going back to a high, we see from that base all the way to the most recent high, a 54% increase, right? So we did see a decline of about 45%-ish, and we saw an increase of 54%, right? And then we see it keep going down here. But I expect out of the long haul, in the long haul, right, if you go and look at the perspective here, whoops, let me get rid of that real quick. And you look at a long-term view of this, we're going to see rises much, much more spectacular than $20,000 right here, right? We're seeing a big correction because of this enormous rise that we saw right here in 2017 all the way to 2018. We saw a really spectacular rise. It was huge, right? It was all the way, and I'm doing this approximately, but it was around 450% from September, about a 450% increase, right, in the market. Now we've seen a 450% increase, and we've really only seen a 70% decline from that increase, right? So that's crazy. Goes up 450%, declines 70%. Everybody thinks it's the end of the world, right? So you can expect that there's going to be much, much more increases after this. There could be another dip, right? There could be another dip. It could go down as low as 4,500-ish, you know, around somewhere right down here. It definitely can happen. And once that happens, though, and if it happens, it may not actually happen. If it does, I can see a very, very spectacular rise coming out of this, you know, all the way up and beyond the $20,000 mark. Whoops, scribbled on there a little bit. So anyway, I wanted to share with you this. I can put this in the show notes if you guys are interested in it, but I thought it was a very, very intriguing chart. Gives me confidence in this bear market that we're in right now. Gives me confidence that this is not the end. Cryptocurrency is not going away. This is only the beginning. This is just a correction that happens multiple times every year. And so it's to be expected. You should expect it. You should have funds set aside so that when there is a correction, you could jump into the market, buy on the dip, and sell when it goes back up on the bounce. I'm Dan from CryptoCamacho.com. Hopefully you enjoyed this video. Love your comments, so please post them after subscribing by clicking on that little red button right there on YouTube. See you guys.